Today, Uganda's growth lags behind that of Kenya, Tanzania, and Rwanda. In fact, the world has revised the country's growth gap to 5% from the previous projection of 7%. This and more are facts entailed in the latest economic update of the country. We look at the issues therein.
Now I know you from the World Bank, you've issued another economic update for Uganda. Just help our viewers know what the key issues or the digest of this economic update is.
When we do these economic updates, we take stock of the economy, try to identify what are the challenges and what can we do, what can be done as a country, working together with authorities, with the World Bank, with all the other partners. This time around, we see the economy, first of all, it has been growing positively. There is no doubt about it, but at a much slower rate. So we look at the long-term trends and step back and say, is this how this economy is going to be growing for the next 10, 20 years? Will it deliver the transformation that we want to see? Uganda used to grow at about 7% in those early years of reform in the 90s. In the first decade of the 2000s, average growth was about 7%. Right now, average growth is about 5%. So the question we're asking ourselves, what is the problem?
In fact, that's what I wanted to ask. Yeah. What is the problem? Why are we slowing down at this particular moment in time? Yeah,
when we look at the macro level across the different sectors, you see that agriculture, that employs over 75% of the population, is actually producing much less, about 25% of the total GDP. Which means that in reality, the productivity has been declining in that sector, and yet it should be the biggest, because it employs the biggest number of resources from the economy. When you look at what other countries actually do, when countries are moving forward, as they go through the growth process, people move into higher productivity sectors. Even within agriculture, agriculture transforms into a more productive agriculture sector.
As a country, what are some of the major risks that we are contending with as well, which can also feed into the challenges we have to deal with as an economy?
I mean, some of the major risks that we have on the today on the policy side, probably maybe if we start from there, on the domestic level, we have fiscal policy that should have generated, at least in the short term, a lot of growth, but also created the infrastructure, the capital base that would have been useful for sustainable growth by the private sector, has in the past 3 or 4 years not been very effective, if I may say, because we've tried so many to finance so many projects, but they have not yet materialized. So you find that you budget to do ABC, but you do only a percentage of that at the end of the day. And that has happened, if you look at the numbers, over about maybe about 5 or 6 years in the past. And that has been a problem on the policy side. Then we also have a problem that we are being faced with a very hostile external environment. And if you haven't built your fundamentals strongly, and we have this environment where demand at the global economy is slowing down or up and down, but also we have the regional side that had grown strongly in the past 3 years, then also burst last year because of the crisis that went on in South Sudan. Then we have a challenge because the market, the sources of income and transfers that sort of created a buffer for the economy have not been happening in the last 5 years, and it might continue. It's a risk that this kind of environment might continue in the next 2 or 3 years, and hence be a big challenge for the economy.
Everyone is mentioning or talking about the 2016 elections. And we've seen some investors, I think, trying to, take a wait and see kind of approach. Is it something that comes out anywhere in your report as well?
This is one of the risks, actually, that we put on the table, because like in any other country, if there is an event that you know is going to cause excitement, because normally an election is supposed to be either transition to a change in the way things are done, or a change in leadership, or even if the leadership doesn't happen, then there is some change of some sort. So for the private sector, the investor, they definitely look at such issues and weigh, should I do it now or should I wait a little bit and see what is going to happen? And I think that part of that could be happening even today in the Ugandan economy, contributing to the pressures that the economy is facing.
I hear you. So what are you suggesting as solutions to some of these challenges and probably risks? How do we mitigate them so that we're able to probably grow as we used to, or maintain the growth as it is, because we can as well calm down next year?
Yeah, I think the authorities can continue to do, because monetary policy and fiscal policy are demand management tools. They can continue doing that and to ensure that the demand in the economy meets the supply. Yes. If we don't have enough foreign exchange, they try to do whatever they can to reduce the shilling, for example. That's what the central bank is trying to do. If there is no infrastructure today, the fiscal policy should ensure that they invest so that fiscal policy, infrastructure improves. If we look at the production function for the country, there are some things that we seem to have ignored, and one of them actually is the land issue. We can take it for granted that land is just given. If you have Uganda, 240 square kilometers of land is available. But the issue is not about that availability. It's about how you use that piece of land that you have and to make it productive. If it's agriculture, how does it produce more productivity in agriculture? If it's other non-agricultural things like industries or urbanization, how do you make sure that a square kilometer of land actually produces more value today than what it did in the 1960s?
Thank you very much, Rachel.
Yeah, most welcome.
So nice to meet you.
Thank you too.
Thank you.
The National Social Security Fund says that it could attain more than 30% growth in its balance sheet if the investment profile within the local economy expands beyond its current state. Currently, the fund says that its investment options are very limited, which in part implies that the economy is deprived of its very liquid financial kitty.
The latest financial report on the growth of the National Social Security Fund, NSSF, indicates that the institution attained a 35% increase in its income, supported by good returns of its portfolio investments.
This was driven mostly by 4 stocks that we've invested in. The first one is Umeme. The second one is Stanbic Bank. The third one is Safaricom in Kenya. And then there was also improvement in performance from our own New Vision and also from KCB Bank in Kenya. So that meant that our dividends have really improved.
However, the fund is concerned that investment products within the local economy remains very weak to cushion its billions of shillings in cash flow.
For us to be able to undertake that project, we need these companies to improve on 2 things. One is on disclosure. They've got to be able to disclose as much information about the company. Of course, they've got to be diligent. They've got to be to pay their taxes. They've got to pay their pay as you earn. They've got to pay their NSSF and all those things. And they must also be able to ensure that there is good corporate governance in these companies. Now, a lot of the Ugandan businesses unfortunately don't want to do that.
This concern on compliance by local businesses is also re-echoed by the Minister for Finance, planning and economic development.
They don't, I don't know whether they're trying to avoid the taxes or whatever the case may be, or I don't know. Many people don't want to come up and say, I am here, this is what I'm doing, I pay my taxes and therefore I will need funding. No. Many of these people find difficulties, they cannot even expand because I want them to grow. I've told you the economy must grow. The economy can only grow by further investment by the businesses that are existing and the new ones. The economy will not grow when you are not investing.
However, the Capital Markets Authority maintains that there are formidable efforts towards supporting potential firms source money for capital investments from within the market.
But the principle and the bottom line is that we need to have a diverse institutional investor base. So if you have a diversified institutional investor base, you have a competent industry, professionals, they are certified, they know what they are doing. You have businesses that are hungry for capital, that are hungry to expand and reach out horizons. That will create a good recipe for absorption of the funds that NSF is talking about.
The call for the National Social Security Fund to allow for more of its capital invested within the economy has been far and wide.
But we need a diversified institutional investor base. So that we don't have one big player, but we have like 5 or 6 other NSSFs. Then there you know that the market is not held hostage by one player. That also brings in competition.
Currently, the fund has realized a capital growth of 27% on its balance sheet, moving from 4.4 trillion shillings to 5.8 trillion shillings.